Welcome to another Stock Market Open Live. Today we have the PPI report, good old producer price index that comes out in about 2 minutes. Honestly, expect this to be pretty benign, but so does the entire market, so I guess we'll see what we get. You also had the CEO of Chipotle just become the CEO of Starbucks, but I guess also the CEO of Chipotle. I don't know. I haven't quite figured that one out. And then you've got Home Depot complaining about lower sales than expected. Stock's down just a smidge, though. It's almost kind of like people are sort of already pricing in that consumers have slowed down a little bit. So Home Depot's move down here somewhat indicates that you're probably not really expecting too much pain on a consumer slowdown. Home Depot only down about 81 basis points here despite that consumer slowdown. But either way, what folks are going to be looking at now is PPI. And so Qs right now, they were red at the end of the day yesterday in terms of post-market. They've turned green in pre-market, so pretty green here. Now waiting for PPI, and this is going to be the producer price index, and we're gonna get to, well, frankly, see what kind of juice we get here. So we're looking for 0.2 across the board on a result. Personally, I think both PPI and CPI will come in soft, and a big day will be Thursday for retail sales. Today PPI, tomorrow CPI, then retail sales Thursday, and then of course we've got this Iranian threat as well between now and then. So a lot of real potential problems this week. If we don't get any of those problems, hey, that's fantastic. That'll be great, and it'll be really good for the long-term economy and startups and everything. But anyway, here comes PPI, expecting 0.2 across the board, and it is lower than expected. 0.1 on final demand, 0 on food and energy, and then if you go to food energy trade, it comes in at 0.3, which is a smidgen higher. Big deal, though, because the year-over-year numbers come in low, 2.2. The ex-food and energy year-over-year number, so the core number year-over-year, also comes in lower at 2.4. So a lower PPI read here than expected. Pretty good. We've got CPI tomorrow. This is what we've been expecting, is that you're going to start getting these softer inflation reports, and you're going to reiterate that it's okay for the Federal Reserve to get to cut-in, which is a good thing. Now, the downside of these weaker inflation reports can be that you end up having lower or softer sales growth at companies, and so some folks have been thinking, okay, well, if inflation comes in low, is that all of a sudden going to hurt company's ability basically to take pricing power, right? Yes. And so sometimes what we've seen is that good news in inflation reports has turned into bad news. I personally don't really think that CPI and PPI reports coming in low is bad news. But not a surprise that they're coming in low on PPI today. The question now is, what happens with CPI retail sales the next day, CPI tomorrow rather, and then PPI on Thursday. So let's go take a look at the PPI report, and we'll go through it. And let's see what we got here. Open file. There we go. Okay, cool. So this is going to be the PPI report, and let's see what segments we have within it, if any, that are suggesting any kind of warmth. Well, it's pretty benign report so far. PPI increased 0.1% in July, seasonally adjusted. Final demand prices rose 0.2 in June, were unchanged from May. I personally think inflation is mostly solved, and so I'm going to write this down. Personal belief, inflation mostly solved. The concern is there anything that might motivate the Fed to stall? That's really what you're looking for here. Okay, let's see here. Final demand, okay, fine. July rise in the index for final demand can be attributed to prices for final demand goods, which moved up 0.6%. Okay. Final demand goods. Hold on a second here. The July rise in the index for final demand can be attributed to prices for final demand goods, which moved up 0.6%. In contrast to final demand services, which moved up just 0.2%. Actually moved down 0.2%. Oh, that's really interesting. How did goods get so expensive all of a sudden? Prices for final demand, less food, energy, and trade services advanced 0.3 after increasing 0.1 in June. For the 12 months ending July, the index for final demand, food, energy, and trade services moved up 3.3. Okay, so a little bit of what looks like a little bit of move up there in goods again. Why? 60% of that move was due to energy. I see. Okay, there you go. Prices for final demand goods, less food and energy, and final demand goods rose 0.2, 0.6. Got it. So if you take out gas, so take out energy, prices for final demand goods, less food and energy were up 0.2. Okay. And then obviously you had a little bit of a run up there in your natural gas costs. Okay, that's fine. Final demand services. Ooh, this looks pretty good. This was the largest decrease since moving down 0.2% in March. The July decline can be traced to the index for final demand trade services, which dropped 1.3%. Nice. In contrast, prices for final demand services, less trade, transportation, and warehousing, let's see here, rose 0.3 and 0.4 respectively. Okay, that's fine. So, product detail, margins for machinery and wholesaling decreased 4.1%. Indices for alcohol, food, automobile retailing, fuels, lubricants, desktop, and portable device application software, and physician also fell. Oh, wow, okay. Even doctor, even on doctor side, prices fell. Portfolio management moved up. That's surprising. But we've kind of seen that actually for a while. I'm just surprised that much. And then the index for truck transportation, chemicals, and allied products wholesaling rose. Interesting. Okay, so auto-related down. So it sounds to me like auto-related down, healthcare related down. It looks like where we really got hit was freight up. We've definitely seen freight move up over time too. We can pull up a chart on that. Freight up and port management up. Well, I should say portfolio. That's going to sound too much like shipping port. Portfolio management up. Let's spell it correctly. Freight. There we go. Okay. Otherwise, it seems like broader based sort of disinflation. Let's go down. Let's see if there's anything else here. Let me listen and hear for a moment. I want to get the tables in the meantime.
5 and change. It's back to 388 and change. The 2-year moved more. 2-year was at 4%. Now it's at 398. But it did get down a little bit farther. And one real quick point. This morning we had business optimism, best since February 22 at 93.7. The problem is still well below COVID levels. Melissa Lee, back to you.
All right, Rick, stay with us for more. Let's bring in Peter Earle, senior economist with the American Institute for Economic Research, Betsy Stevenson, a former Labor Department chief economist and CEA member who is now a professor at the University of Michigan, and our own Steve Leisman is here at the table. So what do you make of it all, Steve?
Well, I want to talk about what Rick was talking about and alluding to. Why did the PPI fall? And should you think about this number with the X's or without the X's?
Yes.
What fell in this number big time was trade services. Trade services, you might raise your right eyebrow. What the heck is that and why is that in the PPI? It's a measure of profit margins. How much companies are adding on to their costs for profit or just margins in general. And when you think about this number and this decline in profit margins, you have to ask yourself what role that has played in the inflation process. And do we see two things happening? One is that prices by themselves are coming off, but also margins are compressing. And the importance of that from an investor standpoint is, in this world where we're on the other side of the slope of inflation, are we in a place now where prices are coming down and margins are coming down faster, equal, or slower than that? And that creates a really good question that informs our discussion of Home Depot this morning.
Right.
It informs the question that Andrew asked of Starbucks just a minute ago.
We have been hearing
what's happening with your prices? What's happening with your margins? So I don't think, look, I'm not saying Rick is wrong here or right, but you want to consider yourself whether or not that X trade services is something to think about when you consider the inflation dynamic, or something to throw out.
Betsy, what's your take? Should we consider it or not?
I mean, first of all, let's just say what everybody's going to be looking at is CPI, really not PPI, and then is PPI predictive? And when you look at this report, I don't see that that it's necessarily going to tell us what we're going to see tomorrow.
I think they make an interesting point. So I just got to the tables, which is what I wanted to go to next. And I started highlighting some of the tables because I see exactly what they're saying here. Take a look at this. I find this really interesting. So what you find is that if you look at finished services right here, finished services, let's see here, came in at negative 1.1 right here. So this is finished distributed services or finished services, either of those we could look. Well, let's see. Yeah, finished services came in at negative 0.2 and finished distributed services came in at negative 1.1. But then if you zoom in here for a moment, you're like, okay, well, those are really great, right? Well, what if you then remove trade services? Oh, well, then inflation actually came up 0.3%, which is, 3.6% annualized. That's really interesting. So basically, you have Rick saying, hey, why all of a sudden are we getting these low reads here, but only if we consider trade services in that bucket? Because once we remove trade services, we actually have inflation again. That's what he's saying on the services category. But then if I go over here to final demand, and I look at final demand, any of the first final demand categories here, final demand less food and energy, blah, 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 any of the top categories, I get these low numbers here, 0.1, 0, 0.1. But as soon as I take off trade services, I get 0.4. So all of these right here include trade services. So this is includes trade services. And as soon as I take out trade services, I actually get a number that's 4.6% annualized. Now that's kind of crazy. So that's an interesting argument that Rick's making. Final demand services, less trade services here as well. That's the 3.6 number that we saw down below. So it does look like there's some reason to wonder why trade services plummeted like that. Let me see if there's any kind of note that they put in here at the top. But that is interesting. Let's see here. Services. Trade services. The July decline, there it is. The July decline can be traced to the index for final demand trade services, which dropped 1.3%. Trade indices measure the change in margin received by wholesalers and retailers. Okay. Let's see here. The index for trade services. The indices, services intermediate demand. Okay, here's an inch up. Okay, that's fine. Once you get into these intermediate ones, it gets a little more tricky. Any more tables we can get? That's really just these. Yeah, okay, here's a... Oh no, this just shows you trade services. Okay, 0.1. Thought maybe they might give us a little bit of a breakdown on trade services, but they don't. So, that's kind of interesting. Especially since, if you look at transportation, it's up 0.6, for example, here. Intermediate stage 3, transportation is up 0.5. Intermediate stage demand 2. Transportation, it gets a little more. That one's -3. That one's a little bit more all over the place. I think those are probably a little less important to try to extract all of the little pieces here. Just looking at the final section, the final page, so at the end of the line, so to speak. I see what they're saying. So, basically, I'm going to try to translate this to English. Basically, okay, let's see here. People are happy by the headline read. However, as Rick S. from CNBC suggests, a lot of the lower read, potentially most of it, was due to a decline in trade services. In other words, everything else went up except trade services was an anchor, which trade services won't show up in CPI. So could you have a hot CPI using this as a potential leading indicator, right? So it's not the cleanest good report. I'll put it that way. Not the cleanest good report because of that. Okay. Need some more room over here. There we go. Plot that right there. Okay, good. And then Iran has just publicly rejected the joint statement by the United States, the UK, France, Germany, and others. That was for them to stand down. Okay. All right. Now I want to see what's going on with rates and how the rates market is reacting. So this is interesting. It's pretty good, but I would call this good with an asterisk, and we're expecting it to be good. Question is just, how the market reacts to it. We have no idea. So PPI expected to be good. Was good. But we got an asterisk. So what that does for CPI? What that does for CPI? TBD. All right. Throw that down here. Kind of like throwing my notes right on the document usually. Okay. Now let me see if there's any talk from the suits about that. And then I also want to see what's going on with rate pricing. Rate pricing. Okay. So we're pricing at 1.59 cuts for September. So you've kind of moved up a little bit on that. Okay. Had the effect of moving September up from about 1.5% cuts for, or I should say 1.5 cuts for September to about 1.59 cuts. And gold is actually up and yields are down. Gold up, yields down about 3 basis points. Okay. Very well. Then let's see here. Okay. Let's see what else we said. Whew. We gotta get the coffee cooking. All right. So let's see here. What is being said? Okay. Traders will quickly parse the PPI details to try to get a sense of CPI prices. Let's see. Yields are lower on cooler than expected PPI. Okay. Quick analysis. Regressing monthly changes between the two data series suggests little change CPI tomorrow. Economists are forecasting 0.2%. Benign inflation will validate market expectations for cuts. Yeah, makes sense. Okay. After we do finish commentary on this, we're going to go see what's going on with Home Depot. Let's see. Okay. So, yeah. Not much else there on PPI. I think people are just going to be broadly satisfied with that. Yeah. Don't really see any other concerns there so far. Okay. All right. Fine. So that'll be PPI. So again, good, but with a little bit of an asterisk. Fair. Now, let's go look at Home Depot. Home Depot, Home Depot. Okay. So, let's see here. Okay. Home Depot, let's write this down. Okay, there we go. So, Home Depot is... It's only down 38 basis points. That's pretty good. So Home Depot's down 38 basis points here. And that's after comp sales missing. They were expected to come in at 1.65%. And they came in at -3 to -4. So basically a -3.5 at the midpoint. Let's see. Then you've got Q2 sales missed. Operating margin missed. See, it's very interesting. Home Depot missed across the board. And its stock isn't really going down. So it's almost, this is what we were talking about earlier. It's almost as if people are looking at these consumer companies and saying they've already been sold off. Now, absent a recession, maybe they've been sold off too much. That would be the assumption following this this Home Depot earnings report, although I'm curious to see if there are any notes yet on their earnings call, and I don't think their earnings call has actually started yet. I don't see any notes on it, so probably not. Okay. Let's see here. All right, let's listen in here for a brief moment. If they're not good, we'll go to Bloomberg. Oh, this is about Trump Musk. We already covered a lot of that yesterday, so let's listen to the Doomers.
Is energy trading. A very impressive person. I would say that the volatility in the energy markets will probably, abate a bit sometime soon. But he's not in energy trading right now for third parties. He may trade for his own account. We don't know what he's really doing. But he's mostly spending time on philanthropy. I would say he's a very impressive young man. He became a multi-billionaire well before the age of 40.
What's the advice on the energy infrastructure to power these massive data centers because of AI?
There's no doubt that AI requires a lot of energy, and there's a lot of concern about whether that's going to be good for the environment or not. And most of the big tech companies are now focused on that, and I think rightly so. But I think that's a problem that will be solved in time, and clearly alternative energy will help mitigate the problem, I suspect. Right now, I think one of the biggest things that people are focused on is who's going to be the next president of the United States. So, as you know, most people thought that there's a pretty good chance that Donald Trump would win, because running against Joe Biden looked like he was going to win. Many people thought that. Now it's a jump ball. Nobody really knows who's going to win. And I think we're going to see a lot of turmoil in the markets till the markets really say, yes, X or Y is going to be president of the United States.
You just sat down with David Solomon. You just sat down with John Arnold. What are they thinking about U.S. politics right now?
Well, they try to avoid it, just like I try to avoid it, too. But they may be more involved in politics than I am. I don't get involved in giving money to any politicians, but I do.
You don't give money, but you talk to everyone.
I talk to them all. In fact, I have a book coming out in a couple of weeks on the presidency. I interviewed Donald Trump for the book, and I interviewed Joe Biden for the book. And it's about the presidency and the importance of it. It's called The Highest Calling. Now, I used to say that private equity was the highest calling of mankind, but I had to admit that the presidency is probably a higher calling than private equity. But it's very close.
I love that you say that you try to stay away from it, but you were the one who brought it up, and so we have to go there. There is a real question here about how much turmoil there actually will be, and some people are saying, I'm not going to get into it, and it's not going to be that significant. Where do you see the balance of risks? I mean, what is the Harris trade?
Well, I think right now the markets are uncertain as to who's likely to be president. It's clear to me that she's gotten much more support than people thought she would have gotten, because, remember, as vice president, she wasn't as visible figure as some other vice presidents have been, and the Biden people thought that only Biden could get elected. Now they recognize that she can probably get elected. I think President Trump has not yet figured out exactly how to attack her, and I think the campaign is a little uncertain, but he's a smart man. He's gotten elected before, and I think it's going to be a pretty close election either way.
Do you sleep, David?
I'm sorry?
Do you sleep?
About 5 hours a night, but that's enough.
David Rubenstein, always impressive, of the Carlyle Group in terms of just the quality and scope.
Yeah, I think he's actually got a good point there that, Trump is looking for that weakness in Harris. I mean, it's kind of like you have to rejigger a whole campaign. But, okay, so I'm going to write down, I was just writing down the PPI numbers, and then I still think the Home Depot numbers are very, very interesting. So, larger miss, but the stock in pre-market trading is only down about, what is this, 0.5%? 0.5% due to, let's see, larger miss on Q2 revenue and guide. But the stock in pre-market trading is only down about 50 basis points, suggesting some of the unpricing of a weak consumer has already happened, right? Absent a recession, of course. So let's say that, absent recession. Okay. Then, and we'll see. So we'll watch how this one reacts. Reacts throughout the day, because obviously that could change throughout the day, but so far looks pretty good. Now on PPI, I'll say the only complaint like Rick S at CNBC had on PPI was the removal of trade services, weakening all of the PPI figures, or sorry, the inclusion of trade services weakening all of the PPI services. As soon as trade services were removed, inflation numbers were much higher. And then we'll give a couple examples here. For example, we had so final demand, most final demand categories. Let's watch Home Depot there for a sec. Demand categories were 0 to actually -1, negative 0.1% to positive 0.1%. X trade services, we were at 4. Oh, and I misspelled. Oh, that's funny guy. I actually I did this wrong. Instead of 4.6, it would be 4.8. There we go. We're at 0.4, 4.8% annualized. So a little hot there once you took out those trade services. Same thing here on final demand. Less food and energy. Less food, less energy. No, well, energy did contribute in quite a bit too. But final demand services, less trade services. That's where we're right now. Final demand services, less trade services. Final demand services, less trade services. Up 3.6% annualized. And just 0.3% on the month. So in other words, so in English, when you remove the anchor of trade services, something that doesn't show up to consumers, prices rose more than expected. Okay, so my take on that is it probably just reiterates to the Fed 25 BP versus 50 BP. I don't think that's enough to say that the Fed shouldn't cut. So that's kind of my distillation on that. And let me see if anything else is coming out on Home Depot yet. No. Okay. All right. Cool. So then we have what's going on at Starbucks and Chipotle. So basically, the CEO of Starbucks got the boot. And they're getting replaced with the CEO of Chipotle. Now, that means Chipotle is losing their CEO. So it shows you how people valued this CEO. Brian Nicole is the CEO of Chipotle. And let's take a look at that. So S-Bucks. Wow, look at that move on Starbucks. Starbucks on a new CEO. Not on earnings or anything, just on a new CEO announcement. Up to $88. That's pretty impressive. Okay, let's write that down. Starbucks stock in pre-market up 14% to $88. And then I'm pretty sure Chipotle is going to be down. Chipotle stock in pre-market. I mean, they're losing their favorite guy here. Although I think Chipotle will be fine. Oh, yeah. Down roughly 7.5%. To 51.74. Where have we been? Let's see. So it looks like after the stock split, had a little bit of a sell-off. Not a surprise. It's pretty common after the stock splits, and it puts you a bit of the lower range after the stock split there, and then Starbucks. This puts you. Well, the highest you've been since basically April, the April earnings that tanked it. And Home Depot's holding on. And then of course you've got now on PPI, you've got, looks like most tech companies rising. You've got Tesla up, Nvidia up, Monday.com up, IWM up, Enphase up. Ubiquity is sitting at 171. Oh, that's not open in pre-market, of course. It was just down a little bit yesterday. Yeah, yesterday was interesting on the Qs. You almost bled out to zero at the end of the day yesterday. Had a nice rally, and then you kind of just consolidated in anticipation of the data. Well, now we have the data, and the market's reacting broadly. Happy to this. Let's see. Okay. That's an interesting poach, though. Hey, you did a great job at Chipotle. Now your stock's going down at Chipotle. Why don't you come over to Starbucks and we'll pay you more? Okay. So, let's see if there's anything else here. No. Paramount, slashing some workers. It's fine. Okay. I mean, you're going to get that in just competitiveness. I think that's necessarily a sign. Okay. Okay. PPI diffusion. Let's see. PPI diffusion, which shows the percentage of PPI inputs rising over the last 12 months, is at 80%. That's interesting. So that's a higher run than usual. Let me write that down. So PPI diffusion measures... Oh, how do we say this? PPI diffusion measures the number of items in PPI rising versus declining. That figure is at 80% now, which is probably more like actually almost like a longer run average. Let me see if I can get a better chart on this. PPI diffusion index chart. No, PMI diffusion. That does me no good. No. Okay, fine. Well, it seems like that's roughly the average. Now, the argument is if you want to keep seeing disinflation, that you wouldn't want to see it that high. This is typically more average with what you would see between like what you saw it in 2011, 2015, 05 through like 08, 95. Okay. Which is although it goes up to 90% then. I'll just say some suggest should stay lower, around 60 to 70% to minimize ongoing inflation. I think that's probably a good way to conclude that one. Okay. Good insight. I like this. It's interesting. All right. Now, we have... Ooh, Home Depot saying the consumer is stuck in deferral mindset. Really? Simply a story of deferral mindset among customers who have the means to spend but are waiting for interest rates to decline. Oh, that's an interesting way to put it. Okay. Let's write that down. So, and then Home Depot's right here. Keep an eye on that one. Customers are in a deferral mindset. They have the means to spend, but are waiting for rates to come down. And this is going to be per Home Depot. Huh. Okay. Well, that suggests that maybe when the Fed, has cut multiple times, that it could be an extra round of spending. Now, that's interesting, actually. That's an interesting POV I hadn't thought of before. This, let me write that down. Fascinating POV. Basically, it suggests if Fed cuts a few times, another surge of spending could be unleashed. Okay. All right. It's an interesting idea. I'm not sure how I feel about it, but it's an interesting idea. All right. Let's listen into the doomers for a moment.
Talking to the team last night, and I said, when are they going to get rid of this guy? And they did it today. So at Starbucks, sorry. So I do think it's going to matter who takes over the helm. And so far, I don't know if that news is out yet, but I have not yet seen it.
So this is what we know now, Nancy. We know that the chief operating officer, Scott Boatwright, is going to be the interim CEO. We also know that Jack Hartung, who had announced his retirement from Chipotle in 2025, agreed to stay on indefinitely as the president of strategy. So there is a lot in flux here at Chipotle. Do you think they need to bring in an outsider just to get the caliber of leadership you got from Brian?
I do, Shonali. I think it'll be somebody. It needs to be somebody that can carry that gravitas that Brian Niccol had and has. And so good that the team is staying intact. But the CEO matters, and it's going to be a headline issue that matters a great deal to investors. So, we'll be talking today about whether or not the name is still a member of our 12 Best Ideas portfolio. That's how important Brian is and was to the stock and to the company. But yeah, it's going to matter a great deal, and it's going to take some time. So the stock is likely to just trade sideways or down some.
All right, Nancy, great to get you on today. Thanks so much for joining us last minute. Obviously, this breaking news is pretty exciting, especially if you're an owner of Starbucks shares and you are also an owner of Chipotle shares, and interesting to get your take on how they need to replace Brian. Let's turn now to the economy. U.S. producer prices rose less than expected in July, reflecting the first decline in services costs this year. Joining us now with more is Michael McKee, Bloomberg's chief international economics and policy correspondent. Mike, this is the first of a couple of inflation data points that we're going to get this week.
Yeah, and I'm just going to segue from your last segment and tell Katie I have bad news for you. No. In the PPI, roasted coffee went up 3.3%. That's a big increase. So
I'm going to have to switch to tea.
You're the victim here. Overall, though, the numbers are really good, as Matt was saying. We saw flat to basically just barely up final demand and core, and that has pushed the year-over-year numbers down to 2.4% for core and 2.2% for the headline number. That's significantly lower than the 3% and 2.6% we saw the prior months, and they had been on an uptrend, and you can see this last month they have broken that trend, which is going to be good news for the Fed. Now, what happened inside the numbers besides coffee? It was, as Matt told you at the top of the show, goods prices. They rose 0.6% as gasoline prices pushed those up 2.8%. But services prices fell by 0.2. Trade services, which is basically wholesaler and retailer margins, fell 1.3%. They had risen 1.9%.
Everything we were looking at with trade services was suggesting they were the parts that were rising.
In earnings reports for retailers and wholesalers. Portfolio management prices went up by 2.3%. It is you guys on Wall Street who are the inflation problem at the moment, because of course you get paid either way. Airfares down 0.2%. Passenger car prices fell 0.2. Now let's take a look at ECAN. This is our service on the Bloomberg. Breaks everything down, and people love this.
Yeah, I don't know what Bloomberg is saying here. I mean, I'm looking at trade services right here, and this is on your here it is on your annual. Services, for example, up 0.6. Trade services themselves up 0.8. And oh, sorry, that was June to July. So and trade services is part of services. So trade services had a really big put right there. Then you have trade services right here at 0.4. There we go. 0.4, which was a big part of the services here. Stage 4, they're a little on the lower side at 0.3, and transportation took over there. But otherwise, I don't see how they're getting this idea that, because at the final side, at least on the final demand side, minus services off, we saw prices move up without services. I don't know. It's that's a confusing report. It's just trade services gets measured at so many different places in it. I'm surprised. But, okay, let's listen back in over here. Oh, okay, they're going to commercial. Okay, so as soon as they say that, they're just going to run to commercial. Okay, fine then. Hamas's armed wing says it targeted Tel Aviv with 2 rockets. Explosions heard in Tel Aviv. This time of day? That's interesting. Okay. Huh. Let's see what we can find out. But, yeah, there's not much on that right now. Israel. Yeah, no, I see it here. Hamas issued a statement. Reuters is reporting it as of 2 minutes ago here. Explosions heard in Tel Aviv. Israel media reports. Israeli. Okay. And this is, what's the time in Israel? Isn't it like afternoon? Yeah, it's like 4:13 p.m. That's interesting. Huh. It seems a little early. Usually these attacks come at night. Okay. Alright, well, we'll try to keep getting updates on what's going on there in Israel. Okay. So, let's tick over. Yeah. Okay, no. CNBC and Doomers, they're on commercial. Let's see if I can get updates somewhere on what's going on with this rocket attack in Tel Aviv. Sad. All this war. Israel, let's see. IDF. No, nothing from the IDF. It's really just the media that looks like it's reporting it right now. Let's see here. Oh, here we go. A short while ago, okay, the IDF just posted. A short while ago, a projectile that was identified as crossing from the Gaza Strip fell into the maritime space in central Israel. No sirens were sounded. An additional projectile that did not cross into Israel territory was identified. Now, they don't give much detail here. A projectile that was identified crossing from the Gaza Strip fell into the maritime space in central Israel. Okay. Doesn't necessarily sound like... Yeah, okay, yeah. Israelis N12 News now reporting the rocket landed off the Tel Aviv coast. No casualties reported. Okay. Alright. Yeah, everybody's just a little on edge with Israel right now. So... yeah, we can make a little note of that. Hamas fired 2 rockets towards Tel Aviv. One landed off the coast, and one landed, and one didn't make it into Israeli territory at all. And that's per the IDF. Okay. All right. Well, that solves that for now. Yeah, it'd be unusual for some form of, like, larger attack to be launched at this time of day. It's, you know, what, like 4:16 p.m. Ordinarily, you would see these sort of attacks, or these sustained attacks and larger attacks ordinarily at night. It makes it easier to, take drones off and to move munitions under the cover of darkness, essentially. So even just, minutes or so of notice or lead time, some suggest is beneficial in combat.
Month up 2-2 from a year ago, Jim, but core, as we said before the break, a goose egg looking for 2/10. We'll see what CPI gives us tomorrow.
Yeah, look, this is a Mag 7 number. Who does well in a slowdown? Where do you find the most coiled spring? I'm reluctant to go into small cap again because it turns out you're just buying a future. You're buying some basket that you can't get out of. And David, look, these are kinds of numbers that you get right before you get a cut. And I saw Home Depot. Someone's trading it down 15 earlier this morning, and I'm saying, what an idiot! The Fed's about to cut. You know what stock you buy in the first cut? Home Depot.
Could you figure
death
out
box,
from
we
the
call it.
commentary, and I know the call's been ongoing, in terms of Home Depot, whether they are forecasting the slowdown because the consumer is stretched, or whether the fact that rates are going to come down is actually why the consumer is waiting to embark on perhaps some of those home improvement kinds of tasks and/or larger projects that would require them to finance, and therefore waiting for rates to come down. Which is it?
Yeah, okay, so they do accept the fact that there's consumer uncertainty, but Home Depot has done a lot of straight line forecasts. It's like, wow, okay, it's going like this, going down, so we just have to say it's going to continue to go down. And they're very conservative, they're very good. And it really doesn't matter. It's like Builders First Source when they reported, and it was like suddenly Builders First Source was up, even though the numbers were, the forecast was terrible. And the reason why it was up is because people say, hey, the Fed's going to cut, I got to get in on one of these. Carl, this is like, there's so many amateurs out there. I mean, I don't know. I'm not going to say they're on Robinhood because maybe they're on Friar Tuck. I don't know. But there is an element of stupidity that is just so shocking. I wrote on Twitter, I said, you're only selling down 10 because these went down 15.
I saw that.
And then it went down 15. I mean, and people knew nothing. I mean, they didn't have any knowledge of what Home Depot is going to say, Ted Decker's going to say. But they're just, I have to call them idiots. I'm going to buy them a triple venti cappuccino with skin wet and throw it in their face.
Comps down for 7 straight quarters, Jim. I mean, you think this is, you're calling a bottom on Depot then?
Well, I'm not on Depot. I'm calling a bottom in the psychology of the owner if we can just get the home equity loans down. We got to get that interest rate down, then people want to do something in their place, even if they want to stay in it. But look, Decker is a seasoned pro who knows you can't really defeat the cycle. But the cycle does take a little bit to kick in. I do think that we're building inventory in the country for homes. And if rates come down, then the Fed's going to be in a little bit of a jam. But we need to see some traffic because the stuff in the Home Depot aisle after aisle is doing badly, except for like paint.
Well, their focus has been in professional services and supply chain.
They went that way, and they made that acquisition. We got to find out whether that acquisition really was helpful. But again, I mean, the idea that you want to sell this company down big on the eve of a rate cut, do it without, yes. Before the rate cut was near, you have to sell the stock, and people should have been in it. Because it is a huge, unfortunate, it's more cyclical than it used to be. They don't put up any stores. But it's good as gold. It's a well-run company. So this is the company that
well, there's the kiss of death.
Builders First Source, they go to Builders First Source. But contractors and individuals will come in. They'll bring back do-it-yourself, which has really been on standby. And it's a great situation to own. So those who sold it down 15 have never studied the history of Home Depot. But history means nothing among a particular cohort. And I'm not going to say which letter, X, Z.
You don't mean the social media platform?
No. I can't get it. It's like coming in. I think someone hacked me or something. And I couldn't get into social media.
It's probably a good thing.
No, look, Home Depot, this is a great company. And anybody, like when Frank Blake ran it, when Bernie ran it was such a...
All right, let's see here. What else is this? Small number, what is this? Small number, let's see. No, okay. All right, that's fine. Okay. Wembley Stadium to ban non-ticketed Taylor Swift fans from gathering outside. Heightened security after the Vienna plot. Yeah, did you see that Vienna guy? He was trying to inside them. He apparently got a job at like one of the food service vendors or whatever on the, that operates within the stadium. There were 3 terrorists, and one of them got a job inside. It's scary. All right, so let's take a look at Home Depot here. I want to zoom out for a moment. So Home Depot Its 200-day moving average is about 300. So the stock isn't moving that much, but I know some folks are looking at either a 315 or a 300 moving average move, depending on how the rest of the earnings call goes. You've got about 7 minutes to go until the opening here. Let me go Home Depot. Let's see here. So, no more info on the call. Let me try to see if I can get even a partial transcript. Sometimes we're lucky and we can get a partial transcript. Okay, estimates, financials. Come on, events. Corporate events, come on, my friend, come on. I need it. August 13th, here we go. Call in progress. Oh, it's like they just started. Or it's just not updating. Yeah, all I got was their stupid disclaimer so far. Oh, okay, here we go. Let's see here. Oh, they're just now going on with this. SRS distribution, blah, blah, blah. Significant growth opportunities in front of us. Home Depot stores are convenient. Blah, blah, blah. Remain focused on the long term. Comp sales decline. Regardless of the current pressure in our environment, our team is working hard. Blah, blah, blah. Greater macro uncertainty, pressured consumer demand, weaker spend across home improvement, continued softness in spring projects, also impacted by extreme weather, so we're guiding more cautious. Okay. So, let's write that down. Weather. Blaming weak macro, consumption, do-it-yourself, and spring projects. Okay. Yeah, they're just at trade credit program, blah, blah, blah. Just a bunch of VPs are yapping over here. Now their CFO is yapping. All right, whatever. So I'll kind of let that go. I really want to see what happens with Q&A there once they start getting to that. Okie dokie. So, what else? 5 minutes to the bell. And Home Depot is actually declining still on this. So you have Starbucks rising and Home Depot dropping. It's down about 1.7 right now. Tesla's up about 75 bips. Really, it launched off the 170 or 197 line on that PPI read. And the Qs really took off on that PPI read. They were really happy about that. And so did Nvidia. But what's really interesting is how much Bitcoin is lagging behind. Really becoming a little bit less of a sort of leading indicator than it has been in the past. Okay. Very well. Enphase 109, AMD ARM's up 275. Microsoft's up a bit, 72 bips. What else? Robin the Hood up 162. All right. Very well. Okay. Next. Let's see. 3 Iranian officials have told Reuters that if a ceasefire and hostage deal were reached for the Gaza Strip during this week's Now, that's interesting. 3 Iranian officials have told Reuters that if a ceasefire and hostage deal is reached for the Gaza Strip during this week's negotiations, they may consider not launching attacks against Israel. However, these officials further stated that if they feel Israel is delaying or dragging out negotiations, then they would strike. That's actually pretty bullish. That's the first time I've heard them suggest that. That's great. I'm going to write that down. I like that a lot. So that's really good for the world, frankly. So 3 Iranian officials with Reuters. Let's see. If a Gaza hostage deal is reached this week, they may not launch their strike. Yeah, I think they're a little panicked at the risk of just getting obliterated by the United States. So, really interesting. All right, cool. So, now what do we have? We have... I'll put Home Depot right there. There we go. Now we're going to listen to... Actually, the bell's coming up already. Yeah, look at that. We're within a minute of the bell. Oh, boy. Here we go. Everyone buckle up, boys and girls. Things are about to get entertaining. All right. Good luck, everyone. All right. 20 seconds to go. All right. Good luck, everyone.
Service companies doing a fantastic job with great contacts in the enterprise. I think Dell's a buy, even though they did not raise the estimates.
Let's get the opening bell and the CNBC real-time exchange. And the big board, it's home security company ADT. And at the NASDAQ, Bolsas y Mercados Argentinos, the leading stock exchange in Argentina, as we get some 1% jumps here in the NASDAQ, Jim.
Yeah, now we've got a new, we updated numbers. Starbucks adds $14.6 billion on Brian Niccol getting in as CEO, and it's lost $6.8 for Chipotle. $6.8 billion. Trying to keep track of the ratios.
There you go.
This is a far cry, of course, from last Monday, Jim. Nikkei's recovered last week's drop. Stocks here have done the same.
It does feel a combination of good data and the fact that we recognize that there were just some errant funds. One of the things I want people at home to understand is we're not allowed to find out. When you are, I was a manager, and if something was happening to you, it isn't like people were supposed to share it. They're not allowed to. So we don't really know. David, you know this. We don't really know the giant institutions that were doing this trade and had gotten, as I'm told, very
weird. It looks like you just had Tesla. Tesla really dropped right here. And then you've got, let's see here. Looks like the Qs are trying to hold on, but Tesla's flat. I don't know why it tanked like that. Starbucks keeps going. Home Depot's not really moving down anymore. The Qs are moving up, and Palantir's moving up. Then you've got Supermicro rotating down. Nvidia's holding on to its figures. Apple here. Ooh, nice run on Apple. Okay. Enphase kind of barcoding a little bit. How's Meta doing? Green over here as well. So I'm going to move them. So Meta and Apple. Let's keep an eye on those. And then let's listen in here for a moment.
I mean, David, why would we need rate? If everything's so great, why would we need rate cuts? We could say, hey, you know what? This is pretty good. We're having great growth. We don't have any inflation. I mean, no,
it's a fair point.
He doesn't want to. Doesn't want to straight line. He doesn't want to say, you know, look, I recognize the data's weak. I'm going to take action. If the data were strong, the conversation would be
Tesla green again.
Why are you bothering me? You know that like hour and a half torture that we have? Where, Mr. Chairman, when did you stop beating the Fed funds rate? Whoa, I didn't. I mean,
all right.
Come on.
Listen,
it's kind of nice that the Fed chair answers questions to the American
he answers
press.
questions. He gives people some idea of how he's thinking about things. The question now is, do we get 50 basis points or 25 in September? I think, right? It seems to be a 50-50 wager at this point in terms of at least the way that the
so
futures
you find
are showing
the press conference very illuminating, and you make big decisions on it.
I don't necessarily. I know you're quite critical of it.
Well, because let's have.
But it's better than the days when we used to look at Greenspan's briefcase.
How about we
and
just
be like, oh, it's this big.
Have you been
We're going to get a cut.
Quarter? Just do it Netflix. Let's pick 10 good questions.
I mean,
that way he says, well, here's what I got from the New York Times, rather than Mr. Chairman, you know, my name is so and so from the New York. By that time, I'm done. My name is so and so, or I'm here. Come on. A couple of questions. Select the best questions.
Shares of Chipotle are down 10%. Brian Niccol, of course, leaving the company to become the CEO of Starbucks, effective, I believe it's the 9th of September, in a really stunning move here with the current CEO, of course, Laxman Narasimhan, leaving immediately. Chipotle is going to have to get paid out, by the way. I haven't mentioned that. I mean, he's got stock there, or stock coming to him. I think, a quick look indicated somewhere around 63 to 70 million bucks. They'll do it. I'm sure he's getting incredibly well paid for the job ahead,
Oh, my
Jim.
God. What is he be struck for with the price that he got?
Chipotle shareholders reacting, as you might expect, saying, okay, we've just lost a potential superstar, not potential, a superstar CEO. Your words.
Oh, he's so great. Now, look, they have a great bench. It's kind of like Costco. They've got people who are there for life who are very good. But I know that there are a lot of people who were very disgruntled and were rebellious. There were rebellious people working at the company. Sedition, I would call them. Others might just say, kind of unhappy people.
We were just making note of the number of S&P names that have done better that Chipotle has since Niccol arrived. Do you want to guess how many? 9. 9 S&P names have done better than Chipotle in the time since Niccol was named.
He rebuilt a franchise. I don't know if you guys remember. I was in the restaurant business, David. You know?
Yeah, I'm aware.
And they were in a spiral that it was so painful to watch. And if you take a look at a long-term, zoom in on during the 2015-2016 period, where the beginning of the airborne, oh my, and. Well,
yeah, Chipotle's down about 10.3 right now, though it's not really falling that hard. It looks like Starbucks just got rejected at about the 94 line, though I wouldn't be surprised if it ends up plowing through that. You've got NVIDIA sitting at about 2.7. It's given up a little bit here, so you're getting some rotation down. And then you've got... Let's see here. Apple at 164, still moving nicely. With Tesla bobbing around about a third, looking for a direction here. Okay, let's listen back in.
And, David, when I think about it, I think what we need is like a private equity guy to take a hard
Private equity? We need the world's largest alternative asset manager. You know, when John Gray just sits at the end of the desk, I think about the fact that wouldn't it be great if he was with us every day? Just part of the group.
Let me try to get him.
Yeah. Maybe
he wanted to
chiming
be
in when he wants
to. He wants to be my Mad Money co-host. Why is this show?
Let's not break format. Let's bring in our next guest. Of course, he does join us here. Blackstone, by the way, the largest alternative asset manager, 1.1 trillion assets under management. They own or control as much as 250 companies, 12,000 separate assets in the real estate business. They're the largest private owner of warehouses globally, for example. So, yeah, no shortage of things to discuss with the company's president and COO, John Gray.
Ooh, nice green candle on Tesla.
It's great to be here. Great to be here live at the stock exchange.
Well, it's great to have you. Listen, you were on not that long ago talking earnings. I'd much rather bring it to what we talk about so often, the macro economy, particularly given some of the stats that I just gave people. You know, in rereading your comments and CEO Steve Schwartzman's comments, I did get a more positive tone from your conference call. I would assume perhaps some others did. Are you starting to see a turn and getting prepared for that when it comes to inflation coming down and the potential, obviously, for rates declining sharply in the near future?
Well, that positivity was about the deal business tied to rates coming down. But I think it's helpful to talk about the economic picture overall. And what I'd say what we see from our companies is that there's been real resilience in the economy. Revenue growth still mid-single digit at our companies. Defaults with our corporate borrowers still extremely low. But we are seeing a bit of slowing out there. We're seeing that sequential revenue growth decline a bit. We're seeing weakness. Employment is pretty flat, I would say. And when we look out there, what we're seeing is definitely weakness in the consumer sector in particular, water parks, theme parks, some of our consumer goods companies. But the positive here ties to inflation, which you noted, which is rental housing is definitely coming down. It's lags in the government's data. We see also input costs flat. We see the labor market not nearly as tight. And that's going to give the Fed some room here to cut rates. And when they cut rates, that's super helpful for the deal business as cost of capital comes down. So that optimism you heard from us was we were starting to invest in scale before the all clear sign. We deployed more than $50 billion in the second quarter, deployed or committed, and we want to do that before everybody says things are safe. And that's what you've got to do as an investor.
Well, that was a 2-year high for you guys in terms of what you were actually deploying during that quarter. And so you do anticipate that level will continue given what, that you're have more confidence now because your expectations are that rates are coming down?
I think what you're seeing is as cost of capital comes down, it will enable companies to borrow more at lower costs. That's supportive for the transaction environment. It's supportive for asset prices, right? I mean, you PV, the cash flows out there. It's helpful for real estate. It's helpful for infrastructure. It's helpful for all sorts of companies. And so what we're doing is saying, look, people are still a bit cautious. Assets are priced at reasonable levels in the private markets. Let's try to take advantage of that.
Yeah.
We bought businesses around the world. We bought some fast food businesses, some technology companies at much more reasonable prices than 2021. And certainly in specific areas, there's a lot of opportunity. I would say the data center space is probably the area we've been the most active.
And I want to talk to you quite a bit about that. But I want to come to private equity for a minute because, frankly, between private credit and data centers and infrastructure and so many other things at Blackstone, we really don't talk about it very often. What about the exit side? We haven't seen many IPOs. It's been a difficult time to monetize some of these investments in the funds. Do you expect that things are going to open up there? And until they do, can you really put a lot more capital to work?
Well, it's a natural cycle. If you think about what happened, the Fed raises rates by 550 basis points, and it really stops the deal business, right? M&A activity falls off a cliff. There is no IPO activity, and you have a lot less realizations. Now we've seen the 10-year start to move down. The Fed here fairly soon will probably cut rates. Spreads are also coming in. You've seen investment grade, now non-investment grade spreads tighten. You've seen real estate borrowing costs come down. That starts to get that flywheel starting. We're a big investor in other people's funds in our secondaries business. We're the largest investor in that space. In the second quarter, we saw a 30% increase in realizations over last year. So we're rebuilding, but it takes some time. And as investors, what we're not going to do is wait for that all clear moment. We're going to deploy some capital first, and that's what you see. And then as we move into 25, that's when I'd expect to see a meaningful pickup in realizations.
Now, I want to go, and I know Dave wants to too, and Carl, your data's $25 billion empire, power-hungry data centers. I met the CEO of QTS. Thank you so much for introducing me. And when I came back and said, this is the company that has a vision. You're not trying to put them up and think maybe someone's interested. There's a real demand right now. You seem to be a real believer in what AI can do, and that may be you're involved technically with AI and data centers. So tell us what the big guys are saying to you. What's your relationship with Jensen Huang?
Well, I would say this. We have very good relations with the big tech companies overall. We spend a lot of time talking with them. And I know there's a lot of debate about the amount of investment they're making today. What I would say is they see a huge opportunity here from AI, but it's also cloud migration, it's data storage. And what the data centers are really the highway system of the 21st century.
But we have a bad highway.
Yeah.
Highway system of the 21st.
And there's going to be enormous spend. And if
Chipotle's down now, I'm watching Chipotle. It's down about 12.5 right now, which is pretty remarkable. That's a pretty good hit there for Chipotle. Really good hit, actually. It's kind of sad. And I'm sure they're devastated. They've lost their CEO here. That's a pretty big hit. So Apple's holding on to about 1.3. Here, let's look at some of these charts. Here's Chipotle. It's still just rotating down on this news. Really, what's running right now is the fact that you've got a Home Depot pushing green again after being down is pretty remarkable. The softer PPI, obviously it came with an asterisk, but the market didn't really care about the trade services asterisk. So it seems like you should have some wind at your back in trading today for bullishness. And then you also got this news that we covered from Israel, actually from Iran, that potentially Iran would be willing to forgo their strike if there was a Gaza ceasefire deal struck sooner rather than later. This is actually really bullish in the shorter term. So I would say both of these items combined, this weaker PPI and a potential of maybe we won't strike from Iran. I think both of those things are heavily positive for this week. The downside risks of recession, all of that, those will take longer to play out. And so I know some folks are really interested in like December puts. I'm starting to wonder if it makes sense to pay some of the premium for February if you are indeed trying to hedge for, some kind of issues that are recessionary. Although the benefit of December is it just gets you through the election, essentially. So you can see NVIDIA here's holding on to about 3%. Supermicro back at 561, got down there to about that 580 level. We're also finding that while BTC's trending up here on the 1 minute, it seems to lag a little bit what's going on in the market right now. It's been a little bit less of a useful guide. I think JetBlue's one of the look at that, Enphase at 111. I think JetBlue's one of the few that's kind of been struggling a bit. Let me see here. JBlue. Yeah, JBlue's struggling a little bit. They just did a little bit of a debt issuance as well. Then you've got the Qs. I mean, this is a nice run right here on the Qs. Really nice. So good solid moves here. You've got Tesla, frankly, just rocketing right now. You're up about 2.2. This is probably one of the more volatile moves to the upside that we've seen after the bell. Keep in mind that Tesla opened basically negative at this 197 line. And you smashed through 200 pretty quickly. That could potentially move it up. I mean, I don't think you're going to get to a next line over here anytime soon. But I've seen, on days where it breaks past 200, I've seen it go 205, 210 pretty rapidly. Obviously, no guarantees, but it's something I'm watching. Meta had a really good start of momentum, although some of that momentum has slowed down a little bit here. So a little bit of slowing of momentum. And same thing with Starbucks. It really needs to break through that 94. I'm not sure if it's going to get the strength to do that today, given that it's consolidating right now. Not so great. Apple consolidating a little bit. Chipotle looks like it's finding its bottom. Home Depot's finding its bottom. The Qs kind of high of the day right now. Palantir, look at that rocket ship on Palantir, pretty good. Yesterday in post-market, you got basically right down to 29.29. Look at that, 29.30 right here. And so you really fell down to that line in post-market yesterday, and that was after you were up like 4 or 5%. The sucker just absolutely U-turned. Totally U-turn. So now you're getting sort of a recovery again here on Palantir. So pretty impressive. It does look like you're trying to get some green candles again on Meta and SBucks. And I do wonder if when some of that Iranian news circulates a little bit more, if you're going to get even more bullishness. But I don't think that Iranian news is really broadly disseminated yet at this point. In fact, I'm even having a hard time finding it again. Let me see what I like to do is if I see news early, sometimes I like to trade off of it, and I don't see any articles written about it yet. The only thing I'm seeing right now is the missiles, the 2 rockets that were launched over towards Tel Aviv. One that didn't make it in, and one that landed in the water. I don't see any news on this Iran talk, and the Iran talk's a pretty big deal. This idea that they'd consider maybe delaying an attack. If there's a deal or ceasefire deal in Gaza. That is what a lot of folks have been looking for, is like you just need a ceasefire and now you can finally let cooler heads prevail in the region, which would be very nice. Obviously, still big catalyst this week. You've got CPI, which again, just like PPI, and I said it before, both these reports too, they'll probably end up coming in benign. Retail sales will be a bigger concern, but something that I'm noticing is Home Depot didn't give a flying F about weaker sales, and I thought that was a little weird. Home Depot going green after totally missing on guidance was somewhat of a shocker. So it could be a sign that you might have hit a little bit of a sentiment bottom in some of the consumer stocks, some of the consumer discretionaries. So we'll see if that ends up being true. But something to pay attention to there, without a doubt. Tesla now at about 3%. Let's see if Home Depot gets to hold on. It does look like both Meta's slowing down a little bit, but it looks like Starbucks, I keep seeing it try to knock on that 94 level. That is a pretty powerful level. I think if you can break 94, you're probably $100. I don't know if it'll go to 100 today, but that's what I'm watching level-wise. And Palantir really kicking butt right now. Nice job, Palantir. And Nvidia's at 4% right now. Wow, it took off even more. What's also fascinating is people are staying away from the small cap. You've got IWM. I mean, they're still buying on it. You're at 86 basis points on it. But it's certainly nowhere near the energy that it seems like you're getting on the Qs. So I do think that's quite interesting as well. And Tesla really, I mean, this is a fantastic uptrend right here. Unclear how long this will last, but on weaker inflation data, Tesla's usually a mover. So it makes logical sense, but we'll see. We'll see. All right, let's listen in right here. What do we got?
Going on with Starbucks, because it is a monumental move that we're looking at. Starbucks up 21%, Shonali, biggest move ever.
Chipotle also is steepening its losses, down more than 12%. Elliott is out now with a statement. Of course, this is the big activist hedge fund firm that took a stake in Starbucks. They say that they have been engaged with the board for the past 2 months regarding their perspective, and they view today's announcement as a transformational step forward for the company. They welcome Brian Niccol. They look forward to continuing their engagement with the board, so it's not over yet. And they work toward the realization of the full potential, according to a statement.
I think everybody has to be careful. I mean, this is like key man risk, right? Yeah. Just because one guy moves from a chain that makes delicious burritos that you can't get at the office to a chain that makes expensive coffees that are free upstairs.
Starbucks shares up on a day by $18 billion in market cap. He's an $18 billion man, Katie.
There you go. Of course, we'll see if that momentum actually continues.
No, you got to take the difference. You got to take what Chipotle lost and what Starbucks gained.
This year. That's next in our Wall Street beat. This is Bloomberg.
That would be crazy. You know, in that case, it's probably like a 30 billy. All right, let's try over here.
Nothing. He has everything. I have nothing.
You guys are the best. Love being here.
John,
Thank you.
we really appreciate you taking time. Thank you for coming down.
Really
Appreciate
good.
it. John Gray, president of Blackstone.
As we go to break, let's check bonds and the markets at large. A pretty nice start here, in stocks at least. All sectors green except for energy. VIX back below 20. And as we await Bostic at 115 today, 10-year back to 386, about a one-week low. Stay with us.
Ooh, Bostic. What's Bostic? What are the dirty things Bostic's going to say?
To private insurance and more. Understanding that access to affordable health care should not be a privilege, it should be a right.
Raise your hand if your government plan would provide coverage for undocumented immigrants.
People cheered that.
You as a consumer can choose under my Medicare for All plan to have a public plan, a government-sponsored plan, or a private plan.
So Harris has since said that there is a role for private insurance, but one thing that has been consistent in 2019 is that she advocated for Medicare for all with a 10-year phase-in period and allowing private insurers to continue if they operate with Medicare plans. Now, healthcare insurance finance experts tell Fox Business that a plan like this would add significantly to the nation's debt.
Over 10 years, the cost would be $44 trillion. They're going to be proposing additional taxes, which is fair, but at the same time, those additional taxes would still leave an outstanding cost of $24 trillion.
We've reached out to the Harris campaign for clarity on her position. We have not heard back, but Harris has run for president before, and Medicare for All was very much a part of her platform back in 2019. Stuart?
Madison, thank you very much indeed. I want to get back to the market for a second. David Barneson's still with me. We're up 250 on the Dow. We're up home builders. Okay, let's have a look at the market. NASDAQ up 230. Dow up 240. This is all on the back of cooling inflation. Is that it?
Well, I don't think so, because there was quite a lag between the PPI number coming out and when futures started moving higher. So it could be any number of things, and this is something we talk about a lot. Markets don't need a real clear reason to move up 1%.
If we get good news on the CPI tomorrow.
Which we will.
Which we will?
Yeah. The interest rates are already priced in.
Could this market just be off to the races?
It's already very expensive, Stuart, so I don't think so.
No?
I know you want it. I know a lot of people want it.
I think it's a fair answer.
We're very overpriced in the NASDAQ, and so a lot of that cooling off had to happen. So I think we run in place for a little while. You know what the NASDAQ is up over the last 3 years as of yesterday?
A lot.
10%. 3% per year.
That's it?
Yeah, that's what a range-bound market does. It makes you feel like you've gone higher when we were 10% lower where we were 3 years ago.
All I want to do is get excited about the rally and off to the races.
Don't you get excited about the truth? When I come on here and share the truth, doesn't that excite you?
Oh, careful, son, careful. Moving on.
Yeah.
Check the big board. We got that there. Check the Dow winners. Put them on the screen, please, so I can read them. What are the Dow winners right now? Have we got it? Yeah, we do. Intel, still shy of $20 a share. Nike, Salesforce, Apple at $220. United Health. As for the S&P 500 winners, Starbucks, Builders Resort, First Source. Nvidia is at 113 now. VF and Mosaic Company. Nasdaq winners, Starbucks, Intel, whatever that is, Advanced Micro Devices and Global Foundries. We got all that? Yes, we do. David? You're truly contentious, but we'll love you. Thanks for being here.
I'm friendly and contentious.
Friendly and contentious, that's right. Be good, son. See you later. Still ahead, Israel on high alert for an Iranian attack that could come within days. Former CIA station chief Dan Hoffman is here on that. Kamala Harris and her husband made donations to an anti-police and pro-sanctuary city non-profit. Kill meat on that. Trump and Harris will eventually debate. Democrats are already playing defense on her likely performance. Jimmy Fallon comes in. The media machine is fangirling over Kamala Harris, whatever that means. She just graced the cover of Time magazine, but she wasn't always adored. Brent Bozell has more on that. The 10 o'clock hour is next.
Yeah, Trump was talking about her on the cover of Time yesterday as well, and he's like, oh, you know, she kind of looked like Melania. It didn't really look like Kamala. Like, okay, this is interesting. All right, very well. Let's listen in here.
Which one?
No.
Kovacevic is probably the one who deserved the tough interview.
No, that was not.
Jim, we'll see you tonight.
Just really.
Mad Money, 6 p.m. Eastern Time. When we come back, a lot more on the shakeup at Starbucks in just a moment.
You need new replay. All right, everybody goes to commercial. Everybody. Okay. So now the question is, what is next, me lord? What is next? Oh, me lord. I don't know. What possibly will anyone do today? Well, we'll see. So, Starbucks is really having trouble getting through its line over there. It's the 94.52 line. It just keeps getting rejected at that line. And having a little bit of trouble double over there. Yeah, doesn't seem like it really wants any kind of momentum today. So, beyond obviously the 21% that it's already done, which is fantastic. Don't get me wrong. Oh, here, let me change the channel. But it's getting stuck. So you really need that breakout right there, and you're just not seeing that at the very moment. Chipotle is dragging along about negative 12%. It's been there for a while though now. And what else do we have here? The Qs are slowly trending up. NVIDIA up 4.3. Holy smokes. And Supermicro is actually only up about 3. So, and IWM small caps only up about 72 bips. So not seeing as much entertainment there. A little bit of barcoding now on NVIDIA for the last 3-4 minutes, though you kind of gave up some of that early run there that you had. Then Home Depot still holding on to that green. That's kind of a big deal over there for this one. So then we've got, what else? Let us find out what else there is. Ha ha ha. Ho ho ho. What does Santa Claus have for us today? Oh, Apple. A little tick up there on Apple. No, just pretty straightforward. Oh, look at this. You've actually got Bitcoin now trying to move up. And NVIDIA earnings in about 2 weeks from tomorrow. So also something to be watchful of, to keep that watchful eye on. And come on, Starbucks, push it. All right, Disney's going nowhere. What else do we have? Let's find out. Let's grab the little changes here. Apps is up about 11%. Upstart 6. Redfin 5. Embraer another 4. It's up at $33 right now. And Chipotle just getting slapped in the face here. Oh, it went down to 13%. Ouch. It actually legged down again. Bruh. No. Trying to see if Chipotle is going to create like a bottom here or something, and so far it doesn't seem like it. Anyway, let's go back in over here for a moment. Let's see if Sarah's here.
On news that former Chipotle CEO Brian Niccol is going to take the helm. A lot of optimism being built in. NVIDIA up another 4.5% does not hurt. That's why the NASDAQ is doing so well. Starbucks is also in the NASDAQ. Apple's rallying again today. Broadcom, Microsoft, Tesla, Meta, all joining the party. And that's why we're seeing such a big move. We're going to dive deeper into this morning's inflation report, which we got as well. Also pretty benign in just a moment. But first, we need to get to that big news. Big shakeup in the C-suite at Starbucks that's got shares surging. Our Kate Rogers here with the latest, covers both companies. Kate, Boy, this came as a surprise, didn't it?
Big news, Sarah. Yeah, Chipotle CEO Brian Niccol, as you mentioned, heading to Starbucks next month on September 9th after some 6 years with Chipotle. Laxman Narasimhan out from the board and CEO role at Starbucks effective immediately. Brian Niccol, as we all know, extremely well respected in the restaurant industry as a visionary.
Would hate to be the guy who got fired.
The company, remember, was struggling with food safety issues and quality perception challenges with consumers. Now, under its tenure, it was really a blip with few subsequent issues as he grew the company's loyalty and digital business into a force and introduced new successful menu items. Under his tenure there, the stock soared 770%. And prior to Chipotle, he was Taco Bell CEO, helping to create viral moments for that brand with the introduction of breakfast and also catering to a really key audience, a younger audience. And that's a legacy that remains today. Chipotle has also been able to capture that Gen Z audience with things like clothing and makeup releases, Roblox, Discord partnerships, and more. But the challenges at Starbucks will be very different. First, its footprint much larger and more global, with more than 39,000 locations around the world, company-owned and licensed. Chipotle was on track to hit about 6,000 in the next few years. The China and U.S. businesses at Starbucks are under immense pressure from consumers who are fed up with higher prices, speed of service challenges, and quality issues. So a lot to fix there. One more notable thing, too, the unionization movement at Chipotle really never took hold in the same way that it did at Starbucks. There's a much better, more amenable relationship between those two parties at Starbucks as they've been negotiating and trying to agree to a contract, but that's another key issue to face at Starbucks. Back over to you guys.
Kate, no shortage of challenges at Starbucks, and I'm just curious. I mean, given this incredible move in the stock price already, investors obviously have an expectation that Mr. Niccol is going to be able to challenge them, whether it is the mobile issues, whether it's the fact that so much is now obviously a cold beverage, whether it's China. What are your, how do you sort of see the challenges from your perches covering the company on a daily basis?
Yeah, David, you just really listed the key ones. The China business is its second home market. That's huge, and they've been challenged by Luckin Coffee growing quite quickly and also undercutting them at price. Starbucks wants to remain a premium offering in both China and the U.S., but it needs to also offer discounts to consumers in both of those markets. China is going to be key. Fixing the U.S. business, as Howard Schultz has publicly said in LinkedIn posts leading up to this change, that needs to be a focus. And mobile order and pay, that was something that Starbucks really had right out of the gate and has had some stumbles with along the way. And they're doing things like
Chipotle keeps dumping. It's crazy. Down at 13.4 now. Wow.
to make things better for them, but also for the customer to get speed of service fixed. And they also need to recapture the viral moments, right? The younger consumer, that's a key demo that, may be facing some price challenges right now. And the occasional customer in the U.S. has been lost. They need to find a way to bring them back.
What about Chipotle, Kate? It's down 13.5%. What do we know about Mr. Boatwright, I believe, who's the interim CEO, whether he's going to be a permanent CEO, and who they've got there?
Well, also, Sarah, notably, too, Jack Hartung staying on. He had announced his retirement after, I believe, 25 years, and he will be on for a bit longer there. So I think they're trying to keep people who've been with the company for a longer time around as they search for that new CEO. But it remains to be seen, what will happen at Chipotle, although I would say the playbook is pretty solidly in place that Brian Niccol has built over the years, and that's a very steady ship. And if you remember this quarter,
Starbucks is going to go push that line right now, 94.58.
We're quite happy with its speed of service, with things like its digital ordering system. So we will see who they find to take the helm there in the future.
Okay, yeah, Chipotle down 13% as Starbucks soars more than 21%. Kate Rogers, big day. Thank you.
Thank you.
As for the big economic report of the day, that's the wholesale inflation report, PPI, coming in benign. Friendly for the Fed, for the markets. Again, that's good. The prices rose in July less than expected. And also, I just want to mention, this is really good news. It was the first decline in services prices that we've seen all year. And that's been one of the hotter parts of the economy. So here's the overall PPI price index. The monthly changed there 0.1. The expectation was more like 0.2, so that's good. Year over year now, PPI is about 2.2%. If you take out food and energy, it was pretty much unchanged, which was tame. Another good report. Core rose a little bit, but still 2.4%. All in all, guys, a pretty decent number if you're the Federal Reserve looking to cut rates, and also you're the market looking to price in rate cuts. If we get a CPI report tomorrow, consumer price inflation, which sometimes is correlated with PPI, that's also benign, it would just add further fuel to this argument that the Fed can go and maybe go more than initially expected because of the softening we're seeing in the economy and the more benign inflation rates. The only other thing I wanted to mention, Carl, is that we look at some of the categories that go into
Starbucks perfectly rejected at that line. That's crazy. And I've had this line here forever, so I don't really know where the line came from, but it's like, oh, really? That's crazy. So Tesla is getting a little stuck at 205. So questions as to that, if that can keep going. What's really, pumping right now is apps. It's up another 5-6% since I last mentioned it here. So apps is really pumping, but that one's super, super high risk, small cap. Nvidia, if you're looking for a larger cap, is up 4.8. This is the second day in a row it's up like 4%. Meta's trying to find its bottom here. It looks like maybe it's found its bottom, but it's looking for it here. And then Tesla may have found its top. What about Chipotle? Now, Chipotle keeps bleeding. That one's a little surprising. So, you're almost down 14% now. So, you kind of keep bleeding on this one. Wow, app's now up 18%. Jeez, Lord. I got no exposure to this one. I used to have some options on it. I don't anymore. I had calls on it. Took a little bit of money and left. Facebook slowly climbing here. Okay, all right. So a little bit of the climadudes. What about, let's see here, Starbucks. Oh, now it's going for it. Here comes the break on Starbucks. That could push it to 100 right here. If you could break that. I don't know if that would happen today, given that it's already up like 23%. But I think breaking that 94 line and confirming that's pretty good. So somebody says, what's Hood looking like? Let's take a peek, eh? Hood. It's up about 0.5% right now. Not bad, not bad. Tesla starting a little bit of a rotation down. Meta's rotating up. Starbucks breaking through. And let's see here. Chipotle's still bleeding. Home Depot turns red. Nvidia still going. Bitcoin's still going. Only about 0.5% up on the IWM. So you've actually seen a rotation down on IWM by a bit here. Trade Desk still at 98. Amazon 167. Slightly up here. See how retail sales push it around or bully it around this week. Then Tesla's still topping out. Okay. Starbucks pushing. Bush. How's Apple and Microsoft? Let's see some of the other big names here. Apple's starting to roll over a little bit. Some of the enthusiasm of the day is gone. Apple, Microsoft rolling over a little bit. Microsoft stable. And apps starting to top out. Apps look like it hit 333. Getting a little bit of a topping there. And still rolling down a little bit on Tesla. Come on. Can you do it, Starbucks? This is very, very low momentum here. Very low momentum on Starbucks, unfortunately. So then what else do we have here? It looks like... Okay. Tesla, Meta, Diz. What else? Home Depot goes green again. Make America green again. Nice. IWM Monday. PayPal. So, Affirm after the PPI numbers. Up 3.2%. Nice. Trade Desk. Redfin out of nowhere there. Look at that. 7% now. One of your small cap, sort of interest rate sensitive real estate plays. Tesla gave up some of that enthusiasm. At least for now. Doesn't mean can't come back. All right. Let's do another brief listen in over here.
The market not only believes in Goldilocks, but it thinks the three bears are an extinct species. We see second half GDP substantially weaker, not just some scaling back on the consumption side, but fixed asset investment and net exports are going to be a disappointment. We also think the inflation's a little stickier than people expect on a year-to-year basis, and the Fed is cognizant of that. Their mean target for core PCE this year, for the full year, is 2.8, but we think it's actually closer to 3 by the fourth quarter. On a year-over-year basis, particularly supercore and sticky housing. We will see, but it's mostly the economy slowing that concerns us.
Right. Now, you've argued for S&P 5K by October, I believe, yes?
Yes.
Does that, if we get there, do you nibble, do you gorge, or do you wait?
We'd still be fairly expensive at that point. Brokers love bull markets. It sells stock. The market's naturally manic depressive, Gustav Le Bon, De La Vega kind of things. It swings from one extreme to the other. But the market is still very expensive. And if you look at things like the futures rate cuts that are embedded on expectations, that would guarantee by 2025 into 26 a huge rebound in housing. Mortgage-backed spreads, treasuries would collapse down to a normal level, and the 10-year yield would be much lower. If that happens, you're going to have more inflationary pressure, not just with the structural shortage of labor, the pushback on immigration, and the reliance, I guess you'd say, of China on an export model that's sure to run into massive political opposition no matter who wins the election. So when I look at everything, I think 2% for the Fed on an inflation goal is just a pipe dream. The market on the break-evens will eventually adjust to that, and we'll have to add some term premium as well to the 10-year. All these things really don't argue for the over-exuberance that we see today. I would say that 5,000 would be a temporary floor, but upside would be limited after that.
Finally, your inflationary concerns. You're not going so far as to call for, say, a double top on CPI or something that echoes the 70s.
No, it's definitely not the 70s. However, the Fed is talking about 2%, but the floor now looks like what was the ceiling in the 20 years pre-COVID for inflation. And that's a launching point for a higher move later with a stronger economy in the mid-20s. So if the Fed ever gives up, and they sure should give up on this 2% goal, it's a pipe dream, then the market would have to adjust. We might even add, like I said, some term premium into the market in addition to expecting long-term yields to be higher. Remember, long-term yields really should approximate the nominal GDP of the economy. If the economy can grow at 2% and inflation is 2.5%, then short-term rates should certainly be 4%. Futures is closer to 3% in 25. These are not settings that are maintainable, and therefore PE ratios should come down over time.
We'll keep an eye on your stuff, Barry. Interesting. You've been pretty resolute throughout the summer, at least. It's good to see you. Thanks.
See you.
Barry Bannister.
As we head to break, here's our roadmap for the rest of the hour. Home Depot trying to bounce back from early lows as the company warns of growing cautious consumers.
Plus, Elon Musk hosting former President Trump on X last evening, but not without some hiccups. We're going to take a closer look at some of the troubles that they had technology-wise.
And speaking of Musk,
I mean, we know. What do we have to hear about that?
We're going to go live to the roads of Beijing this hour as Squawk on the Street continues.
Yeah. Okay. Very well. So what else? Qs are relaxing a little bit. Some of that real exciting momentum has chillaxed a wee bit. Not a big deal. Then you've got, let's see here, apps, the one that was momentuming. That one did sort of hit a top there. So you got a bit of a slowdown on this one. Although, look at that. As I say that, it's trying to pop up again. So good for it. Then what else do we have here? We've got, let's see here. We have the meats, as Jack always used to say. They hear these TV commercials and they get so excited. I always think it's kind of funny. But anyway, so okay, where are we? So let's see here. We've got. I take a brief listen to the Doomers to see if they have anything entertaining going on. So far, it's been no.
Blackstone International announcing today it will sell its kidney care unit to Carlyle for $3.8 billion. Now, the transaction expected to close later this year or early next year. Carlyle, of course, has been a private equity investor in the medical tech sector for over 10 years. Next up, General Motors has been laying off staff in China as it overhauls its operations in the region. Now, these cuts represent a major strategy shift for the company, which earned billions of dollars in China as recently as 2018. GM, of course, though, is facing overcapacity in the region thanks to a flood of local competitors. And the Roger Federer-backed On Holdings reporting a mixed bag of earnings. The sneaker maker saw sales jump 28%, but the gross profit margin came in behind estimates. On, of course, trying to find a foothold in its challenge against established players such as Adidas and Nike. And finally, Home Depot raising a warning flag on the U.S. economy. The DIY retailer says that consumers are spending less to remodel their homes thanks to high interest rates and concerns that the broader economy is souring. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal.
Elon Musk interviewed former President Donald Trump last night, and this Tesla CEO took the opportunity to pitch himself for a second role in the Trump administration. Take a listen.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love it
if it were formed.
Well, you're the greatest cutter.
He's a great cutter, Elon Musk. Trump said earlier he was so proud of him for firing all those people at Twitter. For more on that conversation, let's bring in Bloomberg Businessweek columnist and co-host of the Elon Inc. podcast, Max Chafkin. Max, I was pretty astounded, actually, at the amount of pandering that Elon Musk did for this former president. And to be fair, you know, when you're talking to a former president, I'm sure you're going to be respectful, but it really seemed like he was trying to get something.
Yes.
Yeah.
Yeah.
Tesla EV tax credits, baby.
Especially as someone who's followed Elon Musk for a long time, he tends to disagree with people when they say things, when they minimize climate change or say some of the things that Trump said. And he was, you know, very eager during this conversation, as he said, to cater to Donald Trump. Of course, Elon Musk is a savvy operator, and you know, I think he's doing his best to flatter a potential leader of the free world. And the other thing that's happened is Musk has sort of put himself in this position where he almost needs Trump's support. And I think, very much rooting for a Trump victory in November.
Can you talk about the evolution of this relationship? Because Musk was involved in the first administration, then he quit it in a huff, and then they traded insults back and forth for a few years, and now they're friends again.
Yeah, as Musk said during this conversation, as he likes to say, he's sort of been all over the place politically. You know, before he was sort of close to Trump during the first Trump presidency, you know, he was close to Obama. He framed himself, you know, very much as this kind of left-of-center environmentalist during the Obama years. During the Trump years, as you said, he sought to find, you know, areas of common ground. He served on a commission, another commission, which he then resigned from in 2016. What's happened over the last few years is after buying Twitter, Musk has really tacked to the right in terms of his sort of social media persona, and at the same time has kind of done almost like a bear hug around the Trump camp and around the Trump kind of political and cultural movement. And I mean, that's what we saw during this interview. Musk was at pains to say it's not an interview, it's a conversation, almost, you know, almost like heading off even the faintest suggestion that this might be adversarial.
You know, there are business reasons as well that this kind of conversation would be happening. One, of course, is Tesla, but the other, of course, is actually X, Twitter. In recent days...
But I actually thought it was a pretty good discussion. I kind of liked it.
Media and technology group down some 10% over the course of 3 days. How important is Donald Trump and his presence on this social media platform?
I mean, Donald Trump is probably the second most important influencer on Twitter X after Elon Musk. I mean, Elon Musk has modeled himself after Trump in terms of his persona. He obviously has a lot of admiration, as Jack Dorsey, the former CEO of Twitter, did for Trump's sort of persona, and has wanted him to come back. So this is like a huge win for Elon Musk, for X. And there are lots of other ways that Trump could help Elon Musk if he's elected president. SpaceX is a major government contractor. Tesla still, despite the huge sales, depends on government subsidies to some extent. Musk has all these research ventures that will need regulatory approval. So there are lots of ways that this trade, if you think of it as a trade, could help him.
Many subsidized. In fact, I think we all recall when Donald Trump wrote of Elon Musk, when he came to the White House asking me for help on all of his many subsidized projects, whether it's electric cars that don't drive long enough, driverless cars that crash, or rockets to nowhere, without which subsidies he'd be worthless, and telling me how big of a Trump fan and a Republican he was. I could have said, drop to your knees and beg, and he would have done it. Did we see him doing it last night?
Well, no, but he was, as you said earlier, very much catering, seeking to flatter Trump, talking about,
he was playing the beta to Trump's alpha. Let's be honest.
Not only playing the beta to Trump's alpha, but repeatedly suggesting that Trump, during the stream, that we needed a tough president. Trump was that guy. And again, very staggering just to watch as somebody who's seen Musk like to take up that space. Typically, on the other hand, this is kind of what power does. And if there was any doubt, like who the more powerful person in that room or in that Twitter space was, it was settled at the end of the night.
Well, it's been a volatile relationship between two huge personalities, so it's going to be fascinating to see how this continues to evolve. That, of course, is Bloomberg Businessweek's Max Chafkin, and you can listen and subscribe to Max's podcast, Elon Inc., on the Bloomberg Terminal.
That's pretty good. Good chat. Okay, good. So, yeah, I think that's it for the dooms right now. We've got Starbucks lost the line. You've got the Qs consolidating. Tesla's moving nicely. It's sitting still at that 205 to 206 range. And apps is up 16% right now. Not really getting a lot of movement out of Apple, Meta, Microsoft. They're getting a little stuck. And so a little toppy there. Not sure if that's going to end up weighing on the market. Palantir also kind of rotated down a little bit. But NVIDIA keeps going here. So we'll see. Anyway, I'm going to push L button, and we'll see you in the next one. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right. Thank you so much for being here. We'll see y'all in the next one. Ooh, and thank you, my funded futures, for the $99 donation. Very nice of you. All right, we'll see y'all next one. Bye.